Good evening, everyone. This is James coming from Dividend Stock Talk, where we talk about dividend stocks and investing in dividend stocks for weekly and monthly cash flow. Today is October 1st. It is 9:04 p.m. I'm a little late. Need to apologize for that. Sorry. Got a little bit tied up answering some questions from a couple of investors. Get a little tied up with that, and then I just get so engrossed, and I want to give my all, or give the best answers I can come up with. I don't like one-word, two-word answers. I like to give scenarios, explanations, and examples when I answer questions. So sometimes it takes me a long time to answer a very simple question, but the question I was answering wasn't really that simple. It's like a four-part question. Let me share it with you. There's a lot of people out there. Well, this was the question. With a lot of people out there doing videos on dividend capturing, why do I want to watch yours? That's just one part of the question. My answer to that part was, dividend capturing is a 400-year-old trading strategy. The stock market started in 1590s, 1580s, 1590s, but they actually sold the first dividend paying stock in 1602. That is the oldest one on record that anyone seems to be able to find, where business owners actually went door to door selling shares of stocks to raise money to start a business venture. Now, at the time, they needed a lot of money. The only way they could come up with it was to go door to door asking for people to invest. And what did people get for their investments? They got the promise of a share of the profits. So if you buy some of the stock of this company, we will give you some of the profits every year. Sometimes they pay dividend, and that's where they came up with the dividends. We're going to divvy up all the profits of the dividends. Okay, so anyway, they divvied up all the profits. And the very first company, I believe, to use that approach was the Dutch East India Company. Anyway, the Dutch East India Company ran for almost 200 years. They ran supreme. They were king. They were king of the water, so to speak. So nobody really messed with the Dutch East India Company back in those days. They had their own money. They had their own army. They had their own politics. They had their own laws. It was very interesting back in those days. But anyway, dividend capturing is a 400-year-old strategy. That's part one of the question. Question number two. Don't taxes cut into the profits? Well, yeah. Taxes cut into any profits. So whether you open up your own business, selling ice cream cones on the sidewalk, or newspapers door to door, or when you put all your money into a bank, into a CD, invest in real estate, invest in collectibles, invest in almost any investment you invest in. The difference between your investment and your profit, the profit is taxed. So whether you're being taxed on your IRA or taxed on your CD, you're still being taxed on your profits. So I say if you can make double-digit returns safely somewhere else, fine, go ahead, have at it. I teach people how to get double-digit returns. My idea of a double-digit return is bare minimum of 12% a year. Okay, if you cannot make 1% return per month, you are doing something wrong. Okay, you need to either call me or call someone that is making at least 1% per month. Okay, so 12% a year is nice. And if you invest on your own and you're paying taxes on your 12%, it's just the same as paying taxes on your 1% in a CD. What's the difference? You go buy a piece of real estate, you make a nice little profit off of that, you're still going to pay taxes on it. So, that being said, the fourth part of the question was, doesn't the commissions eat up on your profits? Yeah, well, the commissions eat up on the profits on anything. The same thing with real estate. You pay real estate commissions, buying and selling, you pay taxes and all that kind of crap. It's just a cost of doing business. Okay, So that's why I spent a lot of time answering that question. So let's jump in and see how we ended up last week. Now, today is the first day of the fourth quarter. And the fourth quarter is usually very exciting because lots and lots of companies move up in the fourth quarter. Actually, a lot of retail companies move up in the fourth quarter. So does in heat and oil, heating oil and electric and some of those things like that move up in the fourth quarter. All right, so let's jump on in and see what is happening. Let's give you a rough idea of where we ended up last week. Now, last week we ended up with 62,500, somewhere in that area, and look where we are today, 66,200. I have no positions whatsoever. Every single one of my positions has been liquidated, so I'm in all cash at the moment. So let's jump in, see who's trading, and see what kind of trades we can make. I'm not going to go into the software because that's specifically for the members. So if you want to take a look at this stuff, I'm going to show you what's here that's readily available for anyone to take a look at. You're not going to be able to stick these and find out which one is the best because Thinkorswim doesn't have the software that I created. I created the software specifically to tell me what company does what over a consistent period of time of 10 years or more. Because I want to invest my money, I want to make sure that they do it over and over and over and over again. Because if you think about it, every Monday comes, people get up and they go to work. Tuesday comes, they get up and they go to work. Whatever's happening in the world, totally relevant, people still go to work. Okay, do you remember when the 9/11 came? The terrorists supposedly drove into flew into the Twin Towers and they fell. People were still working that day. Of course, the stock market closed, but people at McDonald's were still working. People at AT&T were still working. People at gas stations were still working. People flipping burgers at McDonald's, they were still working. Well, people at Walmart, they were still working. People still went to work, even in the major tragedies in the United States. The war in Afghanistan, the Desert Storm, people were still working. Okay? Certain industries really aren't affected by certain things. If you have a problem with a certain scenario, let's say hypothetically the war in Afghanistan, certain sectors are affected by that where other sectors are not affected by that. So what does that mean? That means if you're constantly aware of what's happening in the world and you're constantly aware of where your money is and you trade your money on a weekly basis, you have a better chance of moving your money around to be in the best position to get a better return on your money. So the long and short of it, I strive for weekly and monthly returns. Okay? I tell people if you're not getting a double-digit return, whether it's 10%, which is the lowest double digit there is, 10%, 10, if you're not getting a double-digit returns or better, then someone is not telling you something. What it is, I really don't know because I don't know your story. I don't know your goals. I don't know your dreams. I don't know what your plan is or what you're thinking. Anyway, let's jump in and see what is going on. All right, Market Watch up this week. Actually, there's nothing tomorrow. Oops, let's go here. Clear the filter. So Monday, there's 12 companies. Tomorrow, there are 12 companies that are going to be going EX, which means tomorrow will be the last day these companies trade before their dividend is paid out. I'm really not going to elaborate on any of them because it's really irrelevant. Because if you don't already own them, buying them tomorrow ain't going to do you any good. Because tomorrow's the last day they trade before the dividend's paid out. All right, so if we really wanted to get into some dividends, we can look at Tuesday. So you can buy any one of these companies on Tuesday Apple Hospitality Reinvestment Trust Incorporated, paying out a 10-cent dividend. Who are these people? Alrighty. So, this is funny because this is an Apple. It's not really Apple, but it is Apple Hospitality REIT, which is a real estate investment trust. Cute how they use the riding the coattails of Apple Corporation. Anyway, these guys start out the year at 18, go sideways for about a month, drop down, find the low of 1733, right around election time. Then they jump up in the next couple of months to find a high of 20, which is only like a $3 move, which is not a lot. It looks like a lot, but look, it looks like a lot, but it's only $3. Wow. All right. So anyway, she's up here in the $20 area, and she trades for about 2 months there, drops down to the $18 area, 18, 19, somewhere in that area, and trades sideways for about 6 or 8 months. Test that bottom again, but it only makes it to 1748. Okay, recovers, and she's back in the 18 area. Now, 4 up days in a row. She's got the dividend on Tuesday, or the EX date on Tuesday, right here. The EX date is the 3rd, which is Tuesday. The date of record is the 4th. So you only have to buy it tomorrow, hold it, and then you can sell it on Wednesday. And then Thursday, you can jump in again. How many people do we, how many companies do we got this week? We got 12 here, 11 here, so that's 23, 37, 74, 100. So there's 100 companies just this week. That's it. All right, so does this Apple real estate company have anything that worthwhile? Let's find out. APLE. Okay, so APLE has options available, but they're monthly options, which means they're not going to have the option available. I mean, sorry, the option is not going to expire for 19 days. That's 3 weeks. Do I want to wait 3 weeks? No. That's why I go back to here. First thing I do is click on this, looks like a sunshine or whatever it is, and I go to public N through W, slide down here to the weeklies, and these just so happen to be the only companies I'm really interested in. Now, we could play any of these 5 because they're having the EX date on Friday, which means we can get in tomorrow. We put the order in tonight, get in tomorrow, take advantage of this week, and the option expires on Friday. And Friday's the last day of Friday's the last day the stock trades before they pay out the dividend. So let's take a look at some of them. DG is Dollar General. Okay, a 26-cent dividend, not bad. DG. Okay, DG is at 81.05. That's a good number. 81.05. They start out the year at 68, 69. Travel about 2 months there, which is right around election time. Jump up, hit the high of the year of 80. Falls into a range between 70 and 78. Goes sideways for the whole year. This is what you call a channeling stock. So if you had the channel right here between 70 and 75 or 77, you know, sell, buy, sell, buy, sell, buy, sell, buy, blah, 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 blah. Anyway, trading, you could have made a little money, but so let's see, look, what they have to offer for the dividend coming up this week. So you get 5 days to this dividend. She's at 81.05, which is the high of the year. So do we want to chance doing the high of the year, Or do we want to say, you know what, we just want it to go sideways? So it's at 81.05, so let's do the 80 and a half for 38 cents. Okay. Let's see what kind of return we can get on that one. Okay, so it's $600 return for $2,000 investment. Okay, well, that's roughly on 2,000. So that's a little bit less than 30%. Okay, now 30% is not bad as long as the stock stays above $80.50. That sounds like a good number to work with. So, boom, I'm going to take some of those. Who do we got next? Marvel. Marvel's only offering 6 cents, which is not a whole heck of a lot. But Marvel starts out the year at 13, goes sideways for about 2 months, finds the low of the year right around 12.29, finds a trading range of 14 for about 3 months, finds another trading range of 15.75 for about 3 months, back down to the 14 for another 2 months, back up to what we have 17 for a month and a half, back down to 15 for 2 more months, and then back up to 17, and that's right where she is now. So Marvel is at $17.90. So let's take a look at Marvel. MRVL. That sounds good to me. All right, so Marvel's at $17.90, and she's kind of in a very nice spot. Okay, so it's not, you know, the highs are up here and the lows are down here. So let's take a look at the 17.5s. Now 44 is a bit much because it only gives us 6 cents to work with. 6 cents is not a lot to work with. So what I'm going to do is I'm going to offer the market maker to buy 50 contracts at 40. Only because I don't think it's going to fill, and if it does, so be it. So it's a 25% return. Even though I had to change the bid of the offer to $500, it might not work. But if it does, hey, great, no problem. All right, let's get out of there for a minute. All right, that was Marvel. AT&T. We only got 3 more to go. AT&T Corporation looks pretty good. Well, those numbers look pretty good anyway. And here we go, $17.90. Let's see what it looks like. Okay, AT&T starts here at 40, drops down to 39, trades for a month there, drops again to 36, trades for a month there, back up to 39. Then she finds a high of the year of almost 43. Okay, stays in the range, the 40-43 area for about 3 or 4 months. Slowly drops down. Ooh, to find a low down here at 35, gaps up, tries to recuperate 39. Then finds the low of the year, which is 35.21, and now she's on an upswing from 35 up to 39. So let's see what they're offering at the 39 level. 39 doesn't look that bad. So as long as she stays above 39, we're going to make this a little bit of a profit. Now that's how much profit is it that we're looking at. First of all, I want 50 contracts. Move over here, $600 out of $1,900. That's just a little bit, smidge less than 30%. But 30% is not bad for 5 days. Okay? Let's quickly say... What does the seasonality look like for T? Okay, so she's going to go sideways for the next week. And right on Thursday or Friday, she's going to sink. All right, so maybe we'll stay there. Maybe we won't. Who knows? Okay, AT&T. Is that Time Warner? It is Time Warner. 40 cents. All right. Time Warner is TWX. TWX. Now TWX, ooh, look at this. This looks lovely. She starts out the year at 78, almost 79, trades sideways for a little bit. Then she jumps from 79 up to 87. Does that for a month. From there, right around election time, slow and steady right on up to the area which she is at today, which is 102. So Time Warner, TWX, TWX. She's at 102 now. That can't be right. Oh, actually, that can be right. There's no space whatsoever. The 101, 102 spread for a buck. I'm going to put an order in at 84. 450. Why not? Let's give it a try. That's less. That's right around 20%. All right, so give that a try. Oh, why not? Let's take a look and see what seasonality looks like on that one before. Because we can always go in and cancel something if we're not happy with it. All right, flat uptrend. Gotta love it. All right, let's give it one more and see what we're looking at. Verizon. Now, we made a couple bucks with Verizon over the last couple of weeks because we got into Verizon 3 weeks ago. So Verizon 3 weeks ago, and let's see what Verizon has to offer. Excuse me for 1 second, folks. It's that time of year where the season's getting ready to change. So you know what that means? Allergies. Sorry about that. I never had allergies growing up. Never sick. Never allergic to anything. Now that I'm an adult, at a certain age, allergies all the time. Don't know where they came from. All right, so Verizon starts the year at 51. Took a couple of weeks for it to drop down to 46. Then another couple of weeks, she finds the high of the year at 54. From 54, she drops down to a trading range of 49 for about 4 months, but can't hold on. Continues down to find the low of the year at 42. Tries to recoup right back to the 48 area, which is where she's at now. She's at 49.49. And let's see what Verizon has to offer. Now, considering they have the dividend coming out on Friday, this ought to be an interesting ride. All right, she's at 49.49. So that ain't gonna do it. All right, so they're not gonna play nicely. What I'm gonna do is I'm gonna offer them 40 cents for the option of 48.50 to 49, which is already there. So I doubt this one's going to get filled, but we're going to give it a try anyway. We're going to send it on its merry way. There you go. And we're looking at about 25% for the 5-day period with Verizon option. I believe that was the 5 that we're looking at for this week. Next week, we got a bunch to look at. Oracle, American Eagle Outfitters, I believe. Oh, Aetna. Sorry, Aetna. ABBV. Ooh, I like them. APT. Abbott Labs. Toll House. And TRN Turner. Oh, Trinity. Okay. Okay, so there's 4 of them to look at tomorrow or the next day. Now, tomorrow's the 2nd, so we're going to be looking at the 16th. What's available? 16th, EOS. AESG. American Eagle Outfitters. Is that right? EOG Resources. I don't know. Anywho's, I am going to sign out. It's 9:30. Let me quickly check, see if I have any questions. Come on. No questions. Oh, my. All right. That being said, this is James signing out from Dividend Stock Talk. Had a couple of great tips for you. Take a look at them. You can make a few bucks by the end of the week. And we will see you tomorrow.